good afternoon, or whichever time you're watching this clip. Welcome back. We look at outstanding subscriptions and precedent and the precedence concept. So far, we have treated subscriptions owing as being an asset. However, as the treasurer of a club would tell you, most subscriptions that have been owing for a long time are never paid. Members lose interest or simply go elsewhere somewhere else. As a result, many clubs do not include unpaid subscriptions as an asset in the balance sheet or statement of financial position. In an examination, you should assume that subscriptions owing are to be what? Brought into the financial statements, unless strict instructions to the contrary are given. Exhibit 36.3 shows an instance where subscriptions in arrears and in advance occur at the beginning and end of a period. Says an amateur theatrical group charges members an annual subscription fee of $20 per member. It accrues for subscription owing at the end of each year and also adjusts for subscription received in advance. On January 2002, 80 members had not yet paid their subscriptions for the year 2001, which would have been 18 times 20, which would have given what? 360. Sorry, 18 times 20 will give you more than that. Sorry, 18 times 20 will give you a good amount, about 286. Yeah, 360. Yeah, 360. In December 2000, four members paid $80 for the year 2002, which would have been 4 times 80 will give you what? 320. During the year 2002, it received 4,000. It received 7,420 in cash for subscriptions. 360 for 2001, which was this one. 6,920, and then 140 for 2001. 3. 7,420 that would be, alright? For Dino at December 31, 2002, 11 members had not yet paid 2002 subscriptions. That would be 11 times 20, alright? Let's look at it now. First thing is A. So January 1 owing BD is 360. Alright. Then B now, January 1 prepaid BD for $80. And this 80 would have come from here. So from January December 2000, farmers pay $80, which is from here. So which is would have been prepaid for 2002. It was paid in 2001, but now it's you call it prepaid for 2002, right? And then C now December 31, year 2002, it received 7,420 in cash, which was this, and also 140, which is prepaid amount, which is this one, right? Which would have debited in this case. Good. And then now, December 31, 2002, 11 members had not paid their amount, which would be 11 times 20 would be 220, which is have been owing CD. And then now, you add up everything on both sides, and then subtract the smaller side from the bigger side, which give you what? 7,220. And therefore, you ended up with owing BD of the 220 right here, and prepaid of what? 140. This is the difference between the two sides of the account, and this is how subscriptions is really dealt with. Alright, thank you very much for looking. Now look at life membership now. In some clubs and societies, alright, so it's life membership now. So in some clubs and societies, members can make a payment for a life membership. This means that by paying a fairly substantial amount, members can enjoy the facilities of the club for the rest of their lives. Such a receipt should not be treated as income as income in the income and expenditure account solely in the year in which the member paid the money. It should be credited to a life membership account, and transfers should be made from that account to the credit of the income and expenditure account for an appropriate amount annually. Exactly what is meant by an appropriate amount to transfer each year is decided by the committee of the club or society. The usual basis is to establish an average how long members will continue to use the benefits of the club. To take an extreme case, if a club was in existence for which could not be joined until one achieved the age of 70, then the expected number of years use of the club on average per member would be relatively few. Another club, such as a golf club, where a fair proportion of the members join when reasonably young, and where the game is capable of being played by members until during old age, would expect a much higher average of years use per member. In the end, the club has to decide for itself. As a club has to provide amenities for the life members without any further payment, the credit balance remaining on the account after the transfer of the agreed amount has been made to the credit of the income expenditure account should be shown on the balance sheet as a liability. In an examination, be sure to follow the instructions set by the examiner. So the amount of money that was left on the account for the person who would have paid a full life membership would have been a liability to the club. Donations then. Any donations received are usually shown as an income in the year that they are what? Received. Entrance fees. When they first join a club, in addition to the membership fee for the year, new members often have to pay an entrance fee. Entrance fees are normally included as income in the year that they are received. A club could, however, decide to treat them differently, perhaps by separating the income over a number of years. It all depends on the circumstances. Now, let's look at an example of some of the different questions. Say that the following trial balance of the Mobe Football Club was extracted from the books on December 31, 2024. So you have here you have equipment club building, profit from raffles. Watch this now. Raffles now is just like a profit from what? Bar. What is showing to us that they would have done a profit from bar already, isn't it? All right. So profit from raffles. You have subscription receive. You have wages of bar staff. They have bar inventory, January 1, 2014. Is the amount of inventory left in the bar. Good. Then they have bar purchases and sales. They should be sales and they should be what? Purchases. Maintenance wages, football coaches' salary, expenses, cash at bank, accumulated fund at January 2014. This means though that we do not have to do any statement of affairs. All right, good. I've kept that already. Notes now: bar purchases and sales were on a cash basis. Bar inventory at the December 31 was as valued at what? 7,500. This will be a what? Closing inventory for December for 2014. Subscription paid in advance by members at December 2014 amounted to what? 2,650. So you have to do a subscription receive account as well. Profit depreciation of equipment is 3,600. That we use in our balance sheet. We also prepare what? The bar trading account for the year ended December 31, 2014, and also prepare income and expenditure account for the year ending December 31, 2014. Let's look at it now quickly. So is that the Mobile Football Club is the first thing, bar trading account for the year ended December 31, 2014. Now the sales is 134,600, which we have seen already a while ago. And go back up again. I'm gonna ask to pause the video. Write this down, please. Pause the video. Write this down. Pause the video. Write this down for me, please. Pause the video. Write this down. 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 Pause the video. Pause the video. Write this down for me, please. Thank you very much. Alright. So first is the sales. Then you have opening inventory is what? 10,700. And that opening inventory comes from where? Bar inventory. Which is this one, right? Afterwards, you'd have added your what? Purchases, isn't it? The purchases is 91,300. Alright. Then you would list your closing stock, closing inventory, which is 75. You get 94,500. The 75 is the closing inventory. You would have seen it before already. 75 is comes from here, so see there. Bar inventory at December 31 was already at what 7,500, alright? And you get when you get it, you get the cost of goods sold, so that you get your gross profit. Alright? Then let's bar expenses now. Should be wages to what? Bar staff should have been what? 10,200, and that will give you a figure of 29,900. That will be a net profit. That will be a net profit to income and expenses, which should be a profit from bar. Alright? Then now you're gonna go to our income and expenditure account. Income is these now. Profit from bar is 29,900. Then you have your subscription receive, which would have been 383,400 minus the amount which is what? Prepaid. Remember the subscriptions amount is see there? Subscription receive each 400. But then again, you minus what? Amount in advance. Now I'll give you a figure of 387.50. Profit from raffles now is 15,000. Out of everything you get what? 425,650. Alright. And like your total income. They have expensive maintenance workers, football coach salary, just which is depreciation of equipment, which is 600. Out of everything, you get the total expenditure. Subtract it from total income, you get what? 310. And that will be surplus income over expenditure. And that will be it for this example. Thank you very much for viewing. Do have yourself a wonderful day. This is simple, not hard to understand. So remember that prepaid is subtracted in this case. In this case, you didn't have to do any statement of affairs. You didn't have to do any rigmarole, any subscription receive and so forth account. But in other times, you'd have to do it. Not for example, but for a coursework. Please do enjoy your day. Thank you for watching and participating. Yeah,